We've decided now that we're going to implement retaliatory tariffs of 50% on U.S. goods starting September 8th.
You're listening to the Ottawa Real Estate Podcast, your go-to source for all things Canadian real estate.
Hello and welcome back to the Ottawa Real Estate Podcast, your go-to source for all things Canadian real estate. My name is Paul Stevenson. I'm joined with David Warren. I'm joined by David Warren. We're both level 2 mortgage agents. Dave is the owner at Referral Mortgages, and we are back. David, August 26th, absolutely preposterous. School back in session this week for some, next week for others. And apparently, Canada and the US have decided regular inflation wasn't exciting enough, so we added a trade war. And here we are.
Let's get to battle. Let's get to battle, they said.
Yeah, I think the thing that drives me the most nuts is the headline in the Globe and Mail, "If you attack us, it's a war." And that's kind of like the narrative being thrown out, that we're at war with the US, which is like, let's have some discussions first, before we jump to conclusions here. What are you hearing? What are you seeing? What do you think is going to come of this? Because this obviously has a direct impact on our exports, our imports, the real estate market as a whole. Like, what are you seeing? What are you hearing?
Well, I think everyone that's listening to this, I would think, knows and heard, obviously, the news Saturday morning that trade talks fell apart at the final hours on Friday, and the U.S. implementing 50% tariff increase on $28 billion in Canadian goods. There's CUSMA is still in place, which affects about 80% of our exports, which is good. So what's actually being impacted is roughly around 5% of our overall. However, that is still a massive impact to our economy as a whole, right? Especially when everything was looking positive leading up to that. Supposedly, there's been a lot of commentary, which is hard to believe that, the negotiations fell apart because of French language, issues or bilingual labeling, which was what was originally said to be the reason for it. And both sides have come out basically that wasn't the case. But really what it does impact is, we've decided now that we're going to implement retaliatory tariffs of 50% on US goods starting September 8th, conveniently 2 days after the by-elections in Canada. Which is kind of interesting timing that it's not implemented immediately, which then obviously yesterday we had a follow-up from the US that they're going to increase further for January 1st. And obviously we have what seems like a WWE, intro back and forth between Trump and Doug Ford, commentating and making fun of each other on open airwaves, which is pretty comical. What's interesting is there was an interview on CFRA yesterday morning in Ottawa with Doug Ford on live, and his commentary clearly got back to Donald Trump within hours of what Doug Ford had said on that radio interview, and led to the comments from him, which is kind of ridiculous that we're seeing this. But as an overall impact, bad news in the economy drove our bond rates down. It came down, if you want to look at the positive, bond rates, which affects mortgages, came down 9 bips yesterday and down almost 4 bips so far this morning, but that is not good news for the overall economy. It's really going to impact and make it challenging for the Bank of Canada on a moving forward, because they're going to have to balance with Canadian tariffs coming in, or retaliatory tariffs. Canadians will then be seeing a bump on goods on those prices what we're paying. Us tariffing the US comes out of our pocket, which then increases inflation on our side. The industries that are going to be hit with those tariffs and, import and export, there's going to be layoffs faced if nothing is changed. And by the sounds of this, like back and forth commentary, and even as far as this morning, I think it was, of the US saying that they're going to rename Lake Ontario to Lake America.
Right.
That this sort of back and forth is obviously not great diplomacy and not great for negotiations. So the likelihood of this ending soon is probably little to none. And really the Bank of Canada is going to have to balance our raising inflation, but then also our GDP being hit, the economists are saying that this can be anywhere from 1.5% to 2.5% of our overall GDP could be affected through this, which then balances, like Tiff Macklem's at a crossroads of, we've got inflation, which is when you want to raise the overnight lending rate and bank prime. But then we also have the GDP and then unemployment if there's job losses and, going the other way of a drop. So we're kind of in this middle ground when we bring it back to real estate.
Yeah, and I think that the kind of sentiment, or at least the conversation yesterday, was that we're gonna meet them dollar for dollar on tariffs. But the challenging thing about that is that, like, we don't have the same punch, and it doesn't do the same damage. Like we rely way more on the US economy than the US relies on ours. And when we tariff American products, Canadians often end up paying like part of the bill through higher prices. So although it sounds great, and if you're in an argument with your friend and you're like, we're going dollar for dollar, screw you, like maybe that works. But when you're talking about an economy that's literally like 10x what ours is, and we heavily rely on them.
We're 1/12 the economy of the US. So if you in your comment, it's like it's one of you or I going toe to toe with somebody that has a net worth 12x our. We're not winning that. Like we're running out of money. Like it's not. There's not a dollar for dollar. It's ridiculous.
Yeah, and I think as far as how this relates to the Canadian real estate market, which is obviously why we're discussing this. We don't want to be the political podcast, but ultimately, Canada runs on real estate. Like that's what Canada's economy is like. It's a huge portion of that, and that's obviously what we're here to talk about. But when there's uncertainty in the market, as far as are you going to lose your job? Is this going to impact your town, your city? Like I said, your employment, your ability to save, etc. That creates more uncertainty, which creates fewer buyers, which slows the market and so on and so forth. It also puts more pressure on prices because people, when there's uncertainty, oftentimes inventory slows. You have less negotiating power. All these things are impacted, but also I think Ontario has significant exposure to manufacturing and the auto sector. So like Ontario could be particularly vulnerable at this time or moving forward because of that, right? Like Ontario is very heavily reliant on manufacturing and the auto sector. So, if they hit Canadian cars, trucks, auto parts, steel, et cetera, at the 50% level, that's going to have massive economic consequences. And they're only going to get larger and larger and compound over time. So I think employment's probably the highest risk. I think the cost of construction, all that stuff kind of comes with it. But we're already at a massively elevated cost of living here in Canada. And we talked about this last week, the taxation that we have on Canadians. I think we said it was over 50% once you factor in, having to actually buy things and so on. So all of these things combined together puts us in a really challenging position as Canadian citizens to be like, where's the silver lining here? What's the positive outcome of this that is actually going to make Canadians prosperous and give us a better financial outcome than what we currently have with the CUSMA arrangement with the US? And I think there's a way to that, but I think also as Canadians, like we need to kind of get out of our own way. Like we don't need to chime in. Like you were talking about Ford with these comments, like he's literally just insulting the leader of the US, which whether or not you support him or not, if you've ever had an argument with a partner, with a friend, like throwing insults typically escalates things. It doesn't de-escalate things. It doesn't make someone want to come to the table and be really reasonable. Those sorts of things, it just escalates. Nothing gets resolved. It doesn't help anyone. And ultimately on the outside, as people watching, it just makes us angry because like you're supposed to be the adults in the room here, right? You're supposed to be the ones having those mature discussions, informed conversations to better us as Canadians. And that just simply isn't happening. It seems like by the optics that we're getting as citizens, it seems like a horse and pony show, whatever the heck you call it. And it seems like we're just kind of being towed along in this drama that's playing out. But like, what is the end goal? What's the silver lining here for Canadians? And removing all of the noise, like what is Canada doing to put us in a better position with the US? Because ultimately, I think we all agree, we need them. They don't need us as much as we need them. And we may need to make some concessions to enable Canada to prosper by way of the US. Like that's just what it is. And I think this frustration and anger that Canadians are feeling around the optics of it on both sides could be really avoided by just having mature, confident conversations and relaying the information clearly and accurately without venom, without emotion to Canadians. Like, this is what's happening. This is what we're bringing to the table. This is why it isn't working versus he's a loser. He's going to be a loser. He's always a loser. Like, what are you doing? Like, this is 2026. Let's just have a true, honest, constructive conversation so that Canadians prosper. Like, that doesn't seem that difficult. Maybe there's challenges in that conversation. There's things you don't agree on, but like throwing insults and things like that, like what issue has that ever resolved in any capacity of life? Like, it doesn't work. So it's just a weird approach. Like, it's kind of now they're trying to win instead of trying to understand what the other side needs and wants, which is ultimately in any argument, any conversation you have, Like, it's better to try to understand the other side versus trying to win the fight, you know? Like that's really what's happening is everyone's trying to win. And like, that's not how you get to a good solution for both sides.
There's the saying that a true negotiation never has a real winner. Both sides are unhappy, if you will. Like neither side is getting exactly what they want. And to your point, like Canadians are, want this back and forth, or we don't need the US. Well, to exactly your point, like oil, natural gas, electricity, minerals, like everything, we don't have a way of exporting these goods to other countries. We don't have, like, everything is north-south for any sort of oil. We don't have the refining. It's in the US for our crude oil. It's been set up that way to be reliant on them as well. And so it's not something that's going to change immediately or by the snap of your fingers. It's going to take years. And maybe this is the catalyst, and has been the catalyst to start maybe looking at some of these projects of moving east-west and, finding ways of in other markets. But really at the end of the day, like they can outweigh us. We don't have the economy to basically push back that strongly because we just don't have the means to get our products to other markets that quickly. And when our economy is run, like our exports was oil. We have the 4th largest reserve in the world. It's the US that refines it. It's not Canada. So like they refine it and send it back to us and we sell it at a discount to them to get it back. That's our biggest market. Well, we don't have ways of getting it to the coast to get it over to other markets. And that's going to take years, if not a decade. So it's going to take, like you said, adults in the room to get this over with. And it's pretty sad to see that people are like Ford are throwing insults to just kind of drive things. But in the here and now really is, and again, circling back to like our own economy, real estate, all of that, it's going to affect construction costs. It's going to affect people's employment, stability of their employment. They're going to have uncertainty around that. Could it lead to downward pressure on pricing? If people are hesitant to buy again because different markets, like you said, Ontario is going to be hardest hit. It's BC, Ontario, Quebec are the 3 provinces that are in the double digits that are going to be affected. All the other provinces are like at low single digits. So in our province, we're going to be hit extremely hard if this prolongs and that could drive those prices potentially even lower, which then increases default rates and all of that, right? So hopefully some adults come to the table.
Yeah, and to this effect with regards to rates, like we were talking before we came on here, that the bonds have come down slightly in Canada. Fixed rates last week we talked about were very elevated, that in some cases went up 0.25%. And now we're seeing like a true 1% delta between what's available on a variable rate and a fixed rate. Like we're looking at literally 3.6 versus 4.6 almost for fixed versus variable. So those conversations are continuing to be more common. Like people thinking like, okay, what's the plan here? I had a very good conversation yesterday with a pair of clients just asking like, what is the impact of all this uncertainty on rates and so on? Because they were renewing and in March they were considering selling. And they're thinking like, okay, so what is our plan? Like, what are the penalties? How are we going to be impacted? What's the market going to look like as far as like buyers for our home if this happens, if that happens? So I think just people in general are way more informed. They understand the implications of these uncertainties right now. And we talk about it all the time. There's so many balls in the air. They can all drop in different places. This trade war is, I hate the term trade war. Like this situation right now with the US is, in my opinion, not as complicated as it's being presented, but it is going to have massive impacts on the Canadian economy. And I think people are aware of that. Now, I just think that the negative headlines kind of amplify people's opinions. And I don't know, like these conversations are very important because we're able to give at least a bit of a deeper dive into like what impacts what, like what tools they have to use to combat X versus Y and like all of these things. So I was reading an article this morning actually in Canadian Mortgage Trends talking about how like every file for brokers is so much more complex now. There's so many moving parts. But I think a part of that too is that clients are coming in much more informed. So brokers have to, like, you have to understand what's happening in the market because your clients also do. Like, it's not just what's your best rate anymore. It's how is the war in Iran impacting my mortgage rate? How is the current trade war in the US impacting my ability to resell in 6 months? Like, those are much more complex conversations that you do need to understand what's happening in the market to be able to properly advise your clients versus just, this is the best lender, here's your rate. Like, it is much more of an advice-based industry now. And I mean, that's great. I think that's great. Like, that's really where we want to be, because it allows us to obviously, I don't want to say show our value, but it makes it valuable for clients to work with a mortgage broker, because we actually have our finger on the pulse as to what's happening and how it's going to impact them and so on, which, when you're getting this service in most cases at no cost, like, we're compensated by the lender for bringing them the new client. So as a home buyer or seller, you're looking for nonpartisan advice or kind of neutral advice. Like, that is where you can lean into a broker, because like ultimately you're not paying for the service. You're just getting that advice and being better informed before making one of the biggest decisions of your life,
I mean, on the timing of buying or selling as well, I'm going to try to segue here.
Yeah.
into some new, away from the tariff talk, because I know that obviously people have probably been hearing about it or reading about it at nauseum. But one thing for a lot of listeners of ours are landlords, small landlords, or they're renters. And there are new rental rules coming into effect in September.
Your home is one of your biggest investments, and the team at Big Westboro can help you protect it. Our expert brokers will find the perfect coverage to keep your home and belongings safe. Call 613-239-5792 or visit thebig.ca/Westboro for a free quote. Think big, protect what matters most. Are you thinking of buying or selling a residential property? Relationships are at the heart of every real estate transaction at Gertin-Poirier Avocat Lawyers. We love to bring residential buyers, sellers, agents, lenders, mortgage brokers, and the law together to close the deal for you for an effortless client experience that opens doors. Call us at 613-744-4488 or visit our website at gertinpoirierlaw.ca. Let's get to the heart of your deal. Even the best photographer can't hide drywall dust and paint splatter. And every day you delay listing could mean missing peak spring pricing in Ottawa. A to Z Cleaning Expert gets your property truly photo ready. Don't risk going to market half ready. Mention TOREP at a2zcleaningexpert.com to receive priority scheduling for your next listing.
The Landlord and Tenant Board they are making revisions, and the Bill 60 changes come into effect September 21st. So they're shifting away from a landlord-tenant system towards like a faster resolution and tighter deadlines and timeline aspect. One thing is, for landlords out there right now, N4 is issued on late payment. This is being cut in half from when you can provide notice. So they missed September 1st rent payment. You usually have to wait 14 days to issue them an N4. That's now being cut to 7 days. Repeated late payments are being more clearly defined. And what that is basically 6 months of repeated late payments that you can then issue that and have them out from a just even repeated late payment.
Okay.
For like an N12, so this gives landlords another option. So providing 4 months notice for legitimate, like if somebody's going to move into that unit or property for own use, so they're going to either family or themselves are moving into the property, they can provide 4 months notice for legitimate own use eviction to avoid any paying 1 month's compensation of rent. So right now, if you give 60 days notice, you have to provide 1 month's compensation of rent. If they provide 4 months of notice, then they're able to avoid having to legally provide that 1 month's compensation. So this is also something to keep in mind for any sort of people thinking about selling, or realtors out there that are selling a current rental, that, something to advise your clients of, that, if they're selling the property and they're selling to somebody who's going to move into it, tenant's not in a lease, and they're used to that 60 and 120 day notice period kind of comes into play. So that could be meaningful for buying, selling, et cetera, and for current owners.
Yeah, I think, David, these are all great changes. I think the biggest fear really or the biggest complaint, I should say, with like owning rental properties in Ontario is the time and financial exposure involved when tenancy goes bad. Like, right? And we know that we've been hearing for years that everything favors the tenants. Like in the cases where someone is genuinely not paying, like purposely not paying, like there are people in Ontario who are professional renters in the sense that they go from property to property and purposefully do not pay. Like that is their actual business strategy, So I think things like this, where it lessens the risk for someone to be a landlord, will hopefully entice people to at least consider kind of the ma and pa to buy that investment property, right? And actually knowing that you have some safeguard now against that risk and that exposure.
Yeah, it's both sides. Obviously, there has to be protection for tenants, like we saw
Yes, of
within
course.
Ottawa. We talked about it a couple of months ago with the renoviction changes.
Mm-hmm.
Needing to get a permit, provide the city evidence, get notice, permit, provide the tenant that permit showing that they are doing this work, and then provide them with, literature of what their options are. So that's on a tenant side. This is really addressing a lot of the unfortunate delays and issues with, like you said, the mom and pop investors that don't have the deep pockets, that are going bankrupt because tenants are just not paying rent for an outrageous period of time, or just constantly, delayed on payments. So, what I was mentioning about persistent late payment, the structure around that is persistent failure to pay rent on time. So it's being more defined that if they're more than 7 days late, at least 3 times within a 6-month period, and that proof is there, that will be defined now as persistent non-payments. And the landlord and tenant board will consider these patterns from an eviction standpoint and termination of that lease, which is good, because as a small, as a mom and pop investor, you having somebody consistently late 3 months out of 6, always that late, you basically always have to have that bridge, to cover all of your expenses plus your own mortgage in there. And it becomes, really difficult to kind of, why would you buy that rental property? And we've talked about it in previous episodes that people can say oh, well, you're lucky you can even afford a second, you have a one rental property or anything like that. Well, yes, you also don't know what they went through to be able to buy that. They took that risk. They're taking on that consistent risk. There's no guarantee of them making a return, like we're seeing in Toronto and Vancouver and even with Ottawa, where prices dipped and rates. People had variable rates. They went up. They were paying no principal off. They were having to make lump sum payments, and then you've got a tenant not paying rent at all, and you can't get them out. Well, the type of property that those individuals are in are the single family homes, the townhomes, the larger single families that the larger families are looking to rent, and not the shoebox condos. That's what the mom and pop investor market is addressing when we talk about rentals. It's not multi-units, in cases, right? And so saying that they are, oh, well, they can afford it. They've got, a rental property or 2 rental properties. I don't even have one, kind of thing. It's okay, well, sure. Right. Have you taken the steps, number one, to actually look into what it would be required? But at the end of the day, they don't have deep pockets. For them to go bankrupt over this is also kind of crazy. So I think tightening up these landlord and tenant board issues will make it more streamlined, that also these tenants, when they're facing those landlords that aren't keeping their property up to snuff of what they should be, those slumlords and things like that, those hearings, the hope is that they could be listened to a lot quicker and acted on by kind of tightening up some of these others that are more quicker timeline based and more clear cut as far as what those steps look like.
Yeah, I think there is also a mentality in general of kind of a them versus us, right? Oh, they are investors. They have all this money and we barely can afford our home, so they must be able to afford it. But it's very impersonal, right? It's them versus us, like I said. If you think of it as your actual mother and father or your aunt or uncle or someone who owns this property, and it's their life savings in this property. This is their investment. They don't have their RSPs or whatever. This property is their investment. That's what they're doing. So, it's not quite options trading or the stock market, but really if the market takes a turn or if rates go up and they can't rent it out anymore, they're on the hook and they're losing money, So it really is, it's a personal investment. It's not some big corp. It's not TD Bank or Scotia that owns this property. It's your mother, your father, your neighbor. It's actual people in your community that own these units. And that's where you kind of have to be a bit more understanding, I think, of the circumstances as a landlord, but also as a tenant. You want both sides to be fair. You don't want the landlord taking advantage, because there are people, like you said, that will take advantage of those situations. And you also don't want the tenant taking advantage where then the landlord is is basically taking a loss every month just because this person is irresponsible and unable to pay or what have you, So it needs to be fair for both sides. I think these steps, these rule changes are making it a bit fairer, because I think it was a bit lopsided for a while there, but this seems like steps in the right direction, for protecting both sides.
For any listeners that are renters or even landlords, like please reach out to us or let us know, like, how do you think these would affect you and what your, either you as a tenant or you as a landlord, a small mom and pop landlord, like how is this going to affect you? Will this change your decision on holding that rental property any longer? Have you faced similar issues on these delays? I would imagine so. I know I've got a number of friends that do have 1 or 2 units that, have gone through this, and it's taken them upwards of 9 months to 15 months. Some that, are never got paid, and it took so long that they're still owed $40,000 and hasn't been paid, and it's on a single unit property, and that's obviously substantial for an individual.
Yeah.
But, I'm curious to hear from any listeners that want to reach out or comment, like how you think this would affect you on either side of the aisle, and does any of this change your opinion or of as being a tenant or being a landlord as a purchaser? But one thing in it is that nothing is changing from the rent guideline increases or rent controlled units, and that's still just pegged at a percentage increase. And so for 2027, the Ontario rent increase guideline is at 1.9%. So, it's not changing that. It's not increasing it. It's not even moving along with, where inflation's at or anything like that, or, even where our property tax increases have been on properties, which are well in excess of 1.9%. So, again, on the tenant side, from a rent increase standpoint, it's not even following like where property taxes are or anything like that. So that is good from a tenant standpoint, that's not being inflated too much.
Absolutely. David, great show. Mood boost? I think it's mood boost time.
Boost me.
How do you feel? I got 3 today as usual. Number 1, I hate it when people say age is a number. Age is clearly a word. And number 2, dogs can't operate MRI machines, but cats can. And last but not least, number 3, what do you call a flock of sheep rolling down a hill? A landslide. A landslide.
What?
Bad, not bad. Not bad, you.
Could be better. Not bad. Could be better.
So for everyone listening, next week, I believe all kids are back to school next week, which is wild. Like summer's basically done. I'm sorry if your kids are listening in the car right now. Summer's over. So at least summer break is over. So next week we'll be back. We might have the August stats, which would be very interesting. But otherwise, new episodes are out every Wednesday at 10 a.m. Make sure to subscribe if you're not already. Comment, like, and share this video. And we'll see you next week. Thanks for tuning in.
Deuces.